Welcome everyone to today's webinar with Left Brain Professionals. Today, Robert Jones is going to talk about preparing the incurred cost proposal for government contractors. We're really glad to have Robert Jones back with us again for the 12th time this year, as we've been stepping through a 12-part series, and you'll hear more about that as we go. So a couple of things I'd like to mention. My name is Liz Brigson. I love hosting these webinars. It's a super pleasure to host Robert specifically, as he just brings such a fantastic government contract knowledge to the Incorsa audience. Few things to mention is we like to make our webinars interactive, so you can use the GoToWebinar questions pane to ask questions, leave comments as we go. If you want to go out there and let us know where you're joining from, we'd love to hear from you. And then also Robert's associate, Jenny, is on the line. Jenny will be helping to monitor questions as well. So be sure to utilize that feature. If you'd like to download the handouts, you can grab them from the GoToWebinar control panel from the handout section. You can also get them from your Incorsa dashboard. They'll be saved out there, and that way you can reference them in the future. If you would like to earn CPE credit, which we anticipate that most of you would like to do that, we will have 7 poll questions. So today's webinar is 1.5 hours. So we'll launch 7 polls. You'll want to respond to at least 5 of those 7 questions, and then you'll be able to get your CPE certificate from your Incorsa dashboard 1 hour after the event concludes. And if you have any questions about your certificate, polling questions, handouts, you can always email us at support@incorsa.com. Well, it's my pleasure to welcome back Robert Jones. As I said, Robert is joining us for the 12th time just this year. Robert is a government contracts and accounting expert. He has a professional background with a master's in accountancy. He's been in business management roles, compliance, operations. He's served as a controller. He's also managed defense contracts, and he uses that experience as both an instructor and a speaker, and as an advisor as well with Left Brain Professionals. So we recommend connecting with Robert. Follow Robert and Left Brain Professionals. There's so much you can learn here. And with that, Robert, I'll turn things over to you.
Well, good morning, good afternoon. Thank you for the opportunity again to be here. And actually, Liz, I think this was 14 because we had a couple of one-off webinars throughout the year, but yeah, this is definitely number.
That's right. That's right.
But this is the number 12 this year of the series. We've already got the 2021 series planned. You'll be seeing information about that in the follow-up emails. You'll see some stuff on the Incorsa website soon. So 2021 really isn't that far away, and early next year we'll be kicking that off. Again, my name is Robert Jones. The firm is Left Brain Professionals. For those of you who have not been with us yet, we are a boutique accounting firm in that we work only with government contractors. We practice primarily accounting system design, implementation, and audit support. We do a lot of work with indirect rates, cost and price analysis, bids and proposals, unallowable costs, and the topic that we're here to talk about today, the incurred cost proposal. If you interact with us, contact us, send us an email. There's a good chance you'll interact with Melissa and Steve as well. Our learning objectives for the next 90 minutes or so, and I'll tell you there's a lot to cover here today. We could probably turn this topic into an 8-hour all-day webinar. There's really just so much to do. So I want to get through as much as I can in the 90 minutes we've got together. At the end of today's presentation, you should be able to identify the requirements for submitting an incurred cost proposal, recognize the contents of the incurred cost proposal, identify the required and recommended documents, discover strategies and locate resources for completing the incurred cost proposal, and recognize some common mistakes made when completing the incurred cost proposal. So you'll see that I refer to it as the incurred cost proposal, or the ICP. You'll see other people refer to it as the incurred cost submission, or the ICS. When we talk about DCAA and their model, if you go to their website, which we'll be talking about later, you'll see ICE being the incurred cost electronic, because we submit all that stuff electronically. Regardless of some changes in the terminology, we're still talking about the same basic incurred cost proposal. With that, we do like to gauge where everybody is before we start today's presentation. So a quick opening poll here, please.
The first poll for today: what is your knowledge level regarding preparing an incurred cost proposal? A, what's an ICP? B, I know what it is, but not sure how to prepare one. C, I've prepared an ICP, but could use help. D, I'm an expert on preparing an ICP. Going to give everybody about 20 more seconds to answer that first polling question.
And as I look at the results there coming in, whoever that 1% is that says you're an expert, by all means, seriously, please contact me, because we're looking for people like you who can help us perform this work with our clients. If you really know what you're doing, I want to talk to you.
I'm going to go ahead and close this out and share the results.
Yeah, and looks like we're kind of split on the first two. That we got some people saying, what is the ICP? And again, almost half the people saying, I know what it is, but I'm not really sure what to do. So hopefully at the end of today's session, both of those groups will have a much better understanding of what's going on. So let's talk about the requirements for submitting an incurred cost proposal. If you do any flexibly priced work with the government, we're talking about cost type contracts, things like a cost plus fixed fee, cost plus incentive fee, cost plus award fee, or a cost sharing contract, as well as T&M contracts, time and materials. So labor hour contracts are excluded from this. Time and material contracts do come into it because the M portion of the materials is considered auditable, and so that is what brings that into the ICP. If you're doing this type of work, and we'll talk about some of the specific clauses that'll be in your contract on the next slide, but if you're doing this type of work, then you have a requirement to submit an incurred cost proposal. The specific clause that you will see is what we refer to as the allowable cost or payment clause. It's in the FAR at 52.216-7. I don't, as those of you who've been with us, you know that I don't often put a bunch of FAR on the screen, but it's important for some of these that you know what the requirement is. This specific paragraph in D2 says that the contractor shall submit an adequate final indirect cost rate proposal. That's the incurred cost proposal. It's due, and we'll talk about some more of these details. It's due 6 months following the close of your fiscal year. And you've got to have all of the supporting information that goes into it. And again, that's part of one of the topics later in the presentation. Note that this is a requirement even if the clause is excluded from the contract. If you're doing, again, flexibly priced work, you've got to submit this. You'll also see the FAR 42.708 indirect cost rates clause. This is what provides the contracting officer with the procedures to settle final indirect rates and to potentially do a quick closeout as an option. Note that both of these clauses, or this whole concept of incurred cost proposals, applies at both the prime and subcontract level. We've had clients contact us and say, I'm only a subcontractor, it doesn't matter. Not true. Even if you're only doing subcontract work, it still matters. Even if your prime has told you that you don't have to submit it, they're wrong, it still matters. We've had a client who has performed only subcontract work. Their prime said, oh, you don't need to worry about that, not a requirement. Not true, okay? So be very careful about the advice and the guidance that you're getting out there. This applies to both for-profit and nonprofit entities. We have a nonprofit company that we do a fair amount of work with. The nature of the contracts that they have to submit an incurred cost proposal. It applies to both small and large businesses. There's no small business exemption here. Like we have, there's certainly other parts of government contracts where there are some small business exemptions. That does not exist for the incurred cost proposal. And if you're doing SBIR, STTR work, particularly if you're doing phase 2, which is, and I always have to say, usually awarded as a cost type contract, that's going to be a trigger. If you're doing that phase 2, you got to do the incurred cost proposal. One of the other ways that you'll typically know that you need to do an incurred cost proposal, especially if you're a new government contractor, if you had to go through the formal 1408 pre-award survey, that's where they determine that you have an adequate or an approved accounting system. If you went through that, that's an indicator that you have some cost type contracts, very likely, because that's usually the only reason that they'll do the survey is that you're doing some flexibly priced work. So if you went through the survey, guess what? You likely have a requirement to do the incurred cost proposal. So what are some of the other requirements? It's due 6 months after the close of your fiscal year. Since many small businesses follow the calendar year, right, closing out on December 31st, that means that your proposal is due June 30th. Some of you might be saying, well, why are you talking about this December 1st if this isn't due until June 30th? And in fact, what I'll tell you is, if you follow the webinar schedules of some other firms and other training providers out there, you'll see the incurred cost proposal pop up in those webinar trainings, you know, in that March, April timeframe, because they're trying to line up. We've got it here for a couple of reasons. Again, this was a 12-part series. The idea was that we did an end-to-end overview of government contracts accounting across this 12-part series. This is the opposite end, right? You've done all the work throughout the year. Now it's time to submit the incurred cost proposal and do that ultimate reconciliation. The other reason I like to talk about it at the end of the year is because we encourage clients to start gathering the information and start preparing the incurred cost proposal early. You'll hear that when I get to the best practices at the end of this. Is you're now looking forward and thinking, okay, you know, what do we do to close out December, or what do we do to close out the year? Be thinking about, I've got to do a lot of similar kinds of things to do the incurred cost proposal. It's very easy to gather those documents and put them in a folder to prepare for that. The incurred cost proposal is the ultimate, what I call the ultimate reconciliation of costs incurred to amounts billed. This is where you make that determination, did you underbill or did you overbill the government? And that's on a contract by contract basis. Other requirements here, well, let's talk about the risk framework for audit. So DCAA has put out guidance that they use for determining if an audit is going to be performed. There's a risk analysis that goes into all of it. You can see there that essentially if you have less than $100 million in claimed costs, in contract costs, your overall risk is low to the government. And, you know, when they would do an audit will be based upon that risk analysis. So let me tell you a couple of things that would potentially bump up your risk. If you're a first-time submitter, you're just on the radar, there's a greater chance that they could do an audit, right? Because they want to see, are you doing this right? They honestly want to help you make sure that you're getting started in the right direction and you're doing the right things from the beginning, because if they don't pay attention to you for a long time, right, then you develop a bunch of bad habits and potentially you run into issues and then they start going backwards in time, and that can get really ugly. I'm not saying that just because you submit your first incurred cost proposal that you'll automatically get an audit. I'm just saying that it does raise the risk a little bit. Also keep in mind that sometimes DCA or other agencies, and there are other agencies to whom you would submit your incurred cost proposal, other agencies who perform the audits. Sometimes they don't do a full audit, they do a desk review. So they do some analysis remotely. You know, they may come back to you and ask for additional information, kind of like a fact-finding session and go through some stuff. So even if they don't do a formal full audit, it's very likely that they will at least do some analysis of what you've submitted them, looking for completion, validating some basic numbers. And as you submit incurred cost proposals over time, they're also going to look at, you know, rate trends, dollar trends through the years to see what's going on. But you can see that as you get above $100 million in claim costs, then you run into situations where you have more mandatory audits. With that, a polling question, please, Jenny.
The second polling question today. When is the ICP due? A, 6 months after close of fiscal year. B, June 30th for calendar year organizations. C, December 31st annually. Or D, both A and B.
And I'll say that Jenny helps me make some of these questions, and I think that she must have taken some SAT exams along the way like I did, because she makes some of these questions. There's a good answer and there's a better answer here. So there's a good answer
I'm going to go ahead
and
and close that out. There you go.
And so those of you who said A, 6 months after the close of the fiscal year, that is a correct answer. A is correct. However, we made this a little confusing for you because B, Bravo, is also correct, right? Because we talked about that many companies use a calendar year for their fiscal year. So June 30th would be their time frame. And so the true answer here is D, Delta. A and B are both correct. But generally, it looks like people were paying attention, which is good. All right, let's walk through now the incurred cost proposal here. And I will tell you that this is going to be a fairly high-level walkthrough of the individual schedules. You'll certainly see, and I would encourage you, again in the spring, you'll see some other firms and other training companies. If you have to submit an incurred cost proposal, it's always worthwhile to pick up some other training because, again, this is a complex requirement that there's a lot of work that goes into this. You'll see an opportunity where some people take a deeper dive, and maybe Liz, I'll throw that at you. Maybe we'll do a one-off webinar, some in that time frame where we take a deeper dive on these individual schedules. Here today, I want to talk at a higher level about the incurred cost proposal overall, and just again give you a sense of what's ahead of you. There are multiple schedules. Most likely, you'll be using an Excel workbook. DCAA has a template. We have a template. I'll talk about those later. You've got multiple tabs in there, so you've got a tab for each of these schedules. And the first schedule is just a summary of rates. So again, most companies, if you've been with us this year, we've talked about the simplistic approach that companies have a fringe, an overhead, and a G&A pool. So at the very least, you would have those rates on your summary. You'll have a tab for each of those, which we'll talk about in a moment. If you had multiple overheads, if you had a facilities pool as an example, or some of the other advanced pools that we talked about back in the spring, then you'll have schedules for each of those items as well. So with that, Schedule B is the G&A pool. And here you're going to list from your GL, you're going to put the list of all of your GL accounts, the description, and the amounts. When you look at these schedules, you'll see that, again, with the template, there's an opportunity in there to do adjustments. So there are times where we have to make adjustments for oftentimes cost allowability, right? So you may have something in your G&A pool as an example, or in an overhead pool that's in the GL, right? It's going to be in the trial balance that we're pulling out, but we have to make adjustments. And so there are columns in there to walk you through that process. But each of these schedules is about capturing the pool portion, right? That top numerator of the calculation. Schedule C is for overhead. If you had multiple overheads, you would have multiple Schedule Cs, right? So if you're a company out there that you've got manufacturing and engineering as an example, then you would have two Schedule Cs. You'd have one for your manufacturing overhead pool and one for your engineering overhead pool. As we talked about before, when we went through the advanced indirect rates and talked about those multiple pools, right? Obviously, my manufacturing expenses are in the manufacturing overhead. My engineering expenses are in the engineering overhead. And then similarly, when we get to calculating the total rate, right? My base of engineering pool has to be engineering direct cost. My base of the manufacturing pool has to be manufacturing direct cost, right? That's how I properly calculate those rates. Everybody's going to have a fringe pool, right? And so just a reminder that fringe are those costs to maintain our W-2 employees. Those are things like employer taxes, health insurance, retirement, paid absences. I will back up just a moment to talk quickly about overhead and G&A. Again, a quick reminder for those who may be joining us for the first time, overhead are those indirect expenses that we incur to support customers or projects or products in general. We can't identify those costs in a specific customer or any specific project, so they go into the overhead pool. Again, our G&A pool are those costs that are necessary to run the business as a whole. And typically we're talking about things like accounting, HR, IT, business development, stuff like that. So back to fringe where we were. Schedule D in here is for occupancy or facilities. This would be another one of those interim pools that would be part of that advanced setup. If you're a small company and you've got a single indirect rate structure, you're probably putting your facility expenses, being rent, utilities, taxes, insurance, maintenance, and repair, you're probably putting that in overhead. But if you create a separate pool, then you would report it here and have a facilities pool on Schedule D. Schedule E are my allocation bases, right? So that's where I say, okay, I allocate my G&A as an example, total cost input. That's the most common approach that most companies use, right? So on this schedule, I would be showing all of those individual accounts and amounts that go into Schedule E. My fringe, we talked about, remember, is I incur those costs to maintain W-2 employees. We typically allocate fringe over total W-2 labor. So I would be listing out all of my W-2 labor accounts. And remember that W-2 labor comes in the form of direct labor, overhead labor, and G&A labor. My overhead pool is typically allocated over direct labor. Sometimes it includes materials. It depends on your organization and what you're doing. Typically, it's just direct labor plus applied fringe. So I would see that build out. And so what Schedule E does is it pulls over just the total for the pool, right? Because I've got another tab that gives me the breakout. I've got sections that then break out, give me the detail for each of the bases, and I do my rate calculation. And so from here, then I can take that information and flow it back to Schedule A, where I have a very top level, short, simple table that shows me all of my rates, okay? And so the first portion here, what we've talked about in the incurred cost proposal, this is the primary section of calculating rates. There's a lot more we're going to get to in a moment, but the primary portion of calculating rates is here. There are links, and you would want to keep links in your workbook so that as you make updates to something, if you find there's an error, for example, in your G&A pool, and you make an update, you want those totals and stuff to flow through to the other schedules as appropriate. Schedule F is for facilities capital cost of money. Does flow into your rates. We find that it seems, at least for us, that not many companies set up a cost of money rate. If you do have a cost of money rate, this is where you would claim it and where you would set it up. And again, it flows through to your overhead or G&A pools. One of the things to keep in mind here is that in order to claim the cost of money here on the incurred cost proposal, you had to propose it on your contracts, okay? So let's say you've got contracts that are in process now, and as part of your analysis for the year, you realize, hey, we've got a lot of capital tied up, in a couple of these projects. We really could have, claimed this cost of money. Let's go ahead and put it on our incurred cost proposal. No. If you did not propose cost of money up front, and it is not part of the award of that contract, then you cannot come back and claim it later, okay? And if you have existing contracts, getting it modified to add cost of money, I would say is likely not to happen, okay? If you didn't propose it and it's not in the initial award, you're probably not going to get it added later. If you need to have a deeper dive conversation about cost of money, talk to us. I'll just say that as a reminder, interest expense is unallowable. And while this is not really interest expense, the government does realize that there is a cost of money, a cost of having capital tied up. And so this is their, what I call a quasi interest expense. And this is their way of allowing you to get that back. But it is a very specific calculation that you need to deal with. As we carry on through the schedules in the file, Schedule G is the reconciliation of the general ledger to the job ledger. So a couple of weeks ago, we had a webinar where we talked about job costing. And you probably recall that one of the things I said is, please, please, please make sure that your job cost ledger is reconciled to your general ledger. And I always say it's the sum of the parts has to equal the whole. All right, so you should be able to run whatever your system calls it, a P&L by job, a job status report, a job cost report. You should be able to run those reports, add them all up, right? So you should be able to add up direct labor, direct materials, direct travel, et cetera, across all of those jobs. And it should now, right, equal the direct labor, direct material, et cetera, that's listed at the GL level. This is an area where we find a lot of problems. This is where the subledger gets out of whack. And if you wait till the end of the year and try to reconcile that, right, imagine how messy that is, right? Trying to go back 12, or the reality is, right, oftentimes people are preparing the incurred cost proposal, you know, in May or June, right? So you're sometimes going back 15, 16, 17 months trying to find and fix errors. Much more difficult at that time. That's why when we talk about job costing, I tell people reconcile that every month, right? Because it's easier to find the problem within the last 30 days. And if you do that, then when you get to the end of the year and you need to prepare the incurred cost proposal, guess what? You've already got a big portion of this done. You've already reconciled the general ledger and the job ledger. And now on with the job ledger. So Schedule H is where you will have a line or a row for every project, every pricing activity. So for example, if you have an IDIQ contract and you had 10 or 20 or 50 task orders or delivery orders against that IDIQ, each of those task orders or delivery orders is standalone. As we talked about with the job costing again a couple of weeks ago, we said you should have a one-to-one relationship between your internal jobs or projects and those external contracts, delivery orders, task orders. They each stand on their own. So even though you have a top-level IDIQ that you signed, each task order, each delivery order is essentially its own contract. If you had 20 delivery orders that you did work against this year, you've got 20 line items that you're going to put on Schedule H. So you can see that for companies, and we see this at times, companies that may have potentially hundreds of contracts, task orders, delivery orders that they're doing work against, you have to list each one of those. So it's very important to have good job costing report. And obviously, you know, for your project managers, you're going to create typically we do a 1 or 2 sheet job cost report, right? That's one sheet per job, right? So I can see what's happening on that job. This is something where you should be able to generate this data from your accounting system and export it in like a CSV file, right? Some kind of an Excel file, so that we can then get it into Schedule H. Because your columns going across Schedule H are going to be for your direct cost elements, right? So we always have labor, materials, travel, ODCs, and subcontractors. So I've got columns for each of those. And then I have to have columns that apply my fringe, overhead, and G&A, right? Because we've calculated those rates now in the first portion of the ICP workbook. Now, and I've got formulas that point back and say, okay, for the fringe column, go get the fringe rate. For the overhead column, go get the overhead rate, et cetera. So now when I start populating my jobs in here and my direct costs for each of those jobs, then my workbook calculates and says now your total incurred costs, right, by applying fringe, overhead, and G&A, it now gives me my total cost for that job. So I have, you know, a grand total on the far right by job, and then I have a grand total at the bottom that should again match up, right? So my total labor, my total materials, et cetera, that I see on Schedule H should match my general ledger, right? And that would take me back to that Schedule G that we just talked about. Schedule I, this is the part that I again call the ultimate reconciliation, right? The whole point of submitting an incurred cost proposal, and let me pause here and talk a little more about it, right? So if you've got a cost type contract, doesn't matter which flavor it is, but you've got a cost type contract, you've negotiated costs up front with the government, and you've negotiated billable rates based upon a budget, something you've come up with, right? And so you've used those billable rates throughout the year on this cost type contract. The government has reimbursed you throughout the year based upon those billable rates, but throughout the year you've incurred actual costs, right? And so you're tracking what your actual costs were. And at the end of the year, you want to figure out, right? And I always insert the word significantly. Did you significantly underbill or significantly overbill the government, right? Nobody ever hits the target dead on. You want to be as close as possible, which comes back to rate management, a separate conversation. But you want to be able, right? You're trying to figure that out. And that's what the incurred cost proposal is all about. It really boils down to Schedule I. Did you underbill or did you overbill? And that is on a contract by contract basis. And you might be saying, well, if I underbilled, wouldn't I have underbilled all of my contracts? Or if I overbilled, wouldn't I have overbilled all of my contracts for the year? No, the answer is no. And there are a few reasons that come into play for that. Here on Schedule I, we're looking at inception to date, right? So when we have a contract that spans multiple fiscal years, I'm actually looking at all of the inception to date costs, all of the inception to date invoicing, right? Because we're looking at the contract at the top level as a whole. So I have to look at the inception to date information. I have contracts that, because they're multi-year, right? They span fiscal years. They incurred costs at different rates. They started at different times. We proposed different rates. We negotiated different rates. You know, it's not uncommon. And in fact, usually what happens, if you've got 20 open contracts as an example, you probably have 20 different billing rates, right? Depending on when those contracts were awarded and what was negotiated. And so you can see that as, you know, if you plot this, if we were to build a little plot, you would see, right, you have some billing rates here, 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 you know, and your actual rates are going to be somewhere in the middle of that. So you have some contracts that you underbilled and some contracts that you've overbilled over time. As we carry on, Schedule J is where I have to list all of the subcontracts that I, as the contractor, have issued, right? So, and I could be the prime, I could be the subcontractor myself at times, right? So as a prime, we often have subcontractors. Even as a subcontractor ourselves, we oftentimes have subcontractors. Schedule J is where we list out all of the relevant information for the subcontracts that we've issued. And primarily what goes on there, the contractor's name, their cage code, your prime contract number that's related to that, right? Because they need to be able to see what the relationship is between the subcontract you issued and you know, how that ties back to your prime contract. Schedule K, we need to have for our T&M or time and material contract, we need to have hours and dollars by labor category. When we talked about the timekeeping, that's probably been, I don't know, a couple of months ago when we had that webinar, we talked about the need to be able to capture, you know, time by labor category, not just by individual name, but also by their labor categories, right? We often have multiple people who fit into a labor category. We have different labor categories across all the contracts that we have. And, you know, and it gets further confusing because a single employee might qualify for different labor categories depending on the contract. And so you can't assume, for example, that all of your internal people who you might consider an engineer 2 as an example, well, one of those people might qualify as an engineer 3 on a contract, but maybe only an engineer 1 on another contract. And so that goes throughout the system that You've got some mapping to do, which comes into play with your timekeeping system, and you need to be able to export from timekeeping and invoicing to show the total hours and dollars by labor category for each of these contracts. Schedule L is the labor reconciliation, and I'll talk a little more about what people run into there from a problem perspective. But what the government is looking for here is at the top, you're listing out all of your GL labor accounts, your W-2 labor accounts. And at the bottom, you've got to provide information from your 941s, right, which is the labor you reported to the government and paid taxes on. You might say, well, why does the government care? Why do I have to reconcile to the 941? The government wants to make sure that whatever labor costs you are claiming, right, for these government contracts that you're saying are included in your rates, that you paid taxes on those. The government doesn't want to see a situation where, let's say as an example, you paid 941 taxes on $1 million worth of labor, but you start claiming 1.2 or 1.3 million dollars of labor in the incurred costs, right? You're trying to claim something that you didn't pay taxes on. So that's the reason why Schedule L is in here, is to make sure that what you're claiming is also what you paid taxes for. Schedule M is a list of accounting decisions and organizational changes for you companies that maybe got a new CFO, maybe you changed some accounting policies and procedures, maybe you implemented a new accounting software, maybe you changed out timekeeping software as an example. Those kinds of things come into play, and they do have to be reported in here. Again, the government just wants to know what's going on. And also that kind of information is very helpful, especially if you've had a policy or procedure change, for example, around the way you treat certain costs, right? Maybe a cost was previously a direct and now it's indirect, or vice versa. Maybe you had a cost that was, previously an overhead and now it's in G&A. Maybe you previously only had one overhead pool and now you have two. They're different things, and so the government wants you to explain what those decisions were. Schedule N is the contractor certification. That's where your CEO, CFO, or somebody with similar responsibility and authority in the organization essentially signs a certificate that says, the information provided here is complete and accurate, right, to the best of my knowledge, kind of thing. Schedule O is a list of completed or closed contracts, right? So the government wants to know what contracts have you completed that can be closed out on their side, right? Hopefully you're already starting that. For those of you that are involved at all with the actual contract management side of government contracts, you probably know that contract closeout is one of the things that always seems to fall to the wayside and becomes a problem much later. Right? Usually what happens is months, we've sometimes even seen years down the road, somebody comes back and realizes, hey, these contracts didn't get closed out, right? That means that there's things lingering open on the books of the government, and they're trying to get those closed out. As an example, I had a call yesterday with a potential client. They didn't even realize that they had some of these open contracts. The government is coming back, and they're trying to close contracts from 5 years ago, right? So you're supposed to list here again the contracts that you completed the work for, so the government can go in and do their part to actually close out those contracts. Additional schedules, so we have some supplemental schedules. The government wants you to show the comparative analysis from year to year on some of these schedules. They have one for overhead. I started including Fringe because they don't have a comparative analysis of Fringe, which didn't make sense to me, right? Because you think if you want to see a comparative analysis of overhead and G&A, that you'd also want to see a comparative analysis of Fringe. Again, what they're looking for are trends. They want to see, are there significant shifts either in terms of the dollars that you're spending or in the rates that are involved. Supplemental A2 is the comparative analysis of G&A. We have a comparative analysis of the facility's capital cost of money, again, only if you're claiming that. And then there's a comparative analysis of direct costs. Supplemental B, organization and compensation info. So this one sometimes gets a little sensitive because you have to report the total compensation packages for your 5 most highly compensated employees. Oftentimes that's usually people like the CEO, the CFO, In very small businesses, though, sometimes you can have a very highly paid engineer or business development person that climbs up higher in the ranks from a salary perspective. You will need their salary, retirement, health insurance, other benefits, if they're stock options. As an example, that kind of information goes in here. There's some top level information about the organization in terms of total sales and the percentage of those sales that are government and commercial that get reported on here. Supplemental C is a list of prime contracts. So all of your prime contracts are listed. Those are the ones where you are a sub, right? So you got to indicate where the prime contracts where you're a sub. And then supplemental O are contract briefs. This is another area we see companies struggle with. They don't keep briefs throughout the year. A brief is just that. It's really kind of think of it as a template checklist approach to looking at a contract. There's some key information that needs to come out and needs to be reported. And it's things like the contract number, the period of performance, the type of contract that it is, who the contact is, very kind of key, simple information. But if you get to the end of the year and you haven't been gathering this, digging back through all of those files can be problematic. And again, we've dealt with that with some of our clients. Let's talk now about some of the required supporting documents. This is the stuff that you're going to have to prepare the incurred cost proposal, and you're going to have to provide this information to the government when you submit your incurred cost proposal. Obviously, you're going to need the general ledger, right? You're going to need the trial balance, because how else are you going to get the balances for all of the accounts in those pools? You need that job cost ledger. That's the information, again, that goes on Schedule H. Indirect rate reports. So hopefully, if you're doing government contracts and you've got your cost pool set up, hopefully you're already doing monthly indirect rates, right? And you're tracking. I mentioned that a little bit ago of that, monitoring the over and under. Well, the way to do that is through monthly review of rates, right? And making changes either to the budget or to your billing rates as appropriate. But you want your indirect rate reports out for a couple of reasons. One is that it can help you confirm that as you're building the structure in your incurred cost proposal, right, that you've got that you're putting the correct accounts in the pool and in the base as appropriate, and so that you're in agreement that, okay, the way we've been calculating the rates, right, is the way I'm reporting it. It's also a great way to validate those numbers, right? So even if you do it right, there could be mathematically on the report or in your incurred cost proposal, even if you've got the correct accounts and the correct dollar amounts in the pool and in the base, right, there could be a problem with the formula that would, so again, it's just a nice side by side. And we do find that with some clients. We find that, again, somebody copied a formula possibly wrong in the incurred cost proposal. We have found errors in clients' internal indirect rate reports, right? Again, somebody, when they built the report, there was an error on the internal report. So just a great way to validate that information. You're going to need a list of all your prime contracts, and that includes the contact info stuff that we talked about a moment ago. A list of all your subcontracts that you issued. That was that Schedule J that I mentioned. A list of those closed contracts, the Schedule O that I talked about. Some other information, 941's W-3 year-end payroll summary report. I was talking about the Schedule L reconciliation. While technically they only show you, the DCAA and the documentation points to the 941s, we like to get a copy of the W-3 and the year-end payroll summary. Why? Because we can do some things, I will tell you that I've almost never, other than we've had a couple of small clients who don't have a lot of activity and are very meticulous in their bookkeeping, I've almost never seen a Schedule L that reconciled the first time through. Like it just doesn't happen. And we'll talk about some of the reasons when we get to near the end of the presentation and my best practices. I'll tell you why. But we find that there are problems in there, And by having the W-3, and in particular having those year-end payroll summaries, it can help us to figure out what those problems are, right? So part of W-2 labor, even though it's in the fringe pool, it is W-2 labor that's paid out, is paid absences, right? So if I can potentially, as I'm going through and trying to eliminate and figure out where my problem is in this variance, if I can pull the payroll summary report and see how much we had in paid absences, right, I can see if that ties to my paid absences on the books as an example. So again, having all three of these is very helpful and helps me line up all of those labor dollars. I need my invoiced amounts by contract, right? That's that Schedule I. That's going to be ultimate reconciliation. I have to be able to put in there, what have I invoiced by contract? So hopefully you have an easy way to extract this data from your system. And this is where I will pause for a moment and kind of talk about systems and reports. If you're new to government contracts and you're new to the incurred cost proposal, I highly recommend that you go through here, look at the kind of information that is required, make sure your system is designed to be able to give you that information. And ideally, your system can spit out that information in a flat file, meaning that it can put it out in an Excel file or in a CSV file, right, where I have one row per contract. And that would be ideal, that if I could get a one row by contract that showed me year-to-date invoicing, inception-to-date invoicing, year-to-date direct cost by cost element, inception-to-date direct cost by cost element, my time and hours by labor category as an example, all of that kind of stuff. If I had all of that in a single file, then, and we don't see that often, but if you can build it up and get that stuff out, then when we get it in Excel, we can do filters and pivots and other things and be able to extract the data and more easily build the incurred cost proposal and populate these schedules with the information that we need. Again, I said you'll need the timesheet and invoice data so you get those hours and rates. And that could be a combination of things, right? So what I would recommend here are timekeeping reports, right? Because that would have what people entered in. And then your invoice reports, right? So you're invoicing out that labor, right? So hopefully your invoice has an item for each labor category as an example, right? So if I'm selling an engineer 1, an engineer 2, an engineer 3, I actually have some kind of item in my accounting system, right, that allows me to generate and bill that item, right? So hopefully I can run a report out of the accounting system from an invoice perspective, and I can see the total hours that I invoiced for each of those labor categories, but then I can run reports out of my timekeeping system to help me validate and make sure that that information is correct. Mentioned that we need by labor category information. You'll want your prior year incurred cost because you recall a few moments ago I talked about that year-over-year analysis, that comparative analysis. You'll want the final information to be able to plug in. And a note here, be careful when you pull that in. If you submitted last year's and you went through an audit or otherwise some kind of negotiation and made changes to those final rates, and so you have a letter of what those final rates are, you want to make sure that you're pulling in that final stuff, right? So sometimes what will happen is we'll have a copy of the file that we submitted to the government, but maybe we later negotiated rates as part of finalizing that. On this year, when I report my inception to date cost as an example, for my Schedule H, I need to be able to show the applied rates that were finalized, but also for my year-over-year rate analysis, I need those final rates. So again, just be careful there. Make sure that you don't just grab the prior year file that was submitted. Make sure you get the prior year file that is finalized. And with that, a lot of talking from me, and now another polling question, please, Jenny.
Our next polling question today: which is not a required supporting document? A, general ledger, B, job cost ledger, C, list of open contracts, or D, list of closed contracts? Give everybody about 15 more seconds. Okay, I'm going to go ahead and close out that polling question and share the results.
All right, so which of these was not required? And I guess that we made this one a little interesting. C would be the correct answer, right? We didn't necessarily talk about open contracts, so that would actually be, I guess, part of your job cost ledger. But obviously we need the general ledger, right? We need the job cost ledger, and we do need a list of closed contracts specifically to be able to complete the incurred cost proposal. All right. Carrying on to our slides here, we talked about required documents, and I want to talk a little bit about recommended documents. Accounting policies and procedures. So part of what I will tell you here when we talk about some of these recommended documents, you'll see this as you look at some other incurred cost info, and particularly if you get the DCAA documents and go through it. There are some documents that aren't required to be submitted when you submit the incurred cost proposal, but certainly will come into play if you ever go through an audit. Accounting policies and procedures would be one of those. You won't need those necessarily when creating the incurred cost proposal or submitting it, but if you do go through an audit, you can expect that they will ask for it. Your financial statements, so they will actually ask for the financial statements of the organ, not just the trial balance, that you've downloaded in Excel, but they want to see the balance sheet and the income statement as they are prepared and otherwise presented. Note that an audit or a review is not required specifically for government contracts or for submitting the incurred cost proposal. There are plenty of small organizations out there who otherwise do not get an audit or a review. It's not a requirement. However, obviously, if you do a review or an audit, those are the versions that you would want to provide. Your federal and state income tax returns. Again, during an audit, what the government is going to want to do is say, okay, you claimed, certain costs and certain invoiced amounts on the incurred cost proposal. How much did you claim for taxable income? They're going to do a cross analysis, right, and make sure that it makes sense. They're going to see, is there something here that doesn't jive? If you have any internal audit reports and a schedule of audit reports, these are typically for larger organizations that have an internal audit function. So if you are doing internal audit, you will can be prepared for DCAA or another cognizant agency to ask for those. If you're a publicly traded company, right, you've got the SEC 10K or annual reports that you submit, they're going to want to see those. I think we got, sorry, bullet got separated there. 10K annual report for, again, as I said, for publicly traded companies. Minutes from board of directors meetings, and part of what they're looking for there is going to be tied back to that Schedule M. Any kind of decisions in the company to change policies, procedures, accounting systems, organizational structure, to create overheads, right? That kind of stuff should technically go through the board of directors and otherwise be approved, and there should be some documentation of those kinds of things. And then a listing of any delay claims or termination claims, and what it's, oops, sorry, clicked too quickly here, let me go back. When those items contain costs relating to the fiscal year in question, right? So if you, right, so a termination claim, for example, is, right, the government terminated a contract, you said, okay, you're getting the termination and now you're figuring out what your claim is back to the government, right? If that's part of the fiscal year that you're submitting and the termination has not closed, right, then you want to be able to disclose that, right? Because that can be a problem in closing out the termination or closing out your fiscal year for the incurred costs. All right, Jenny, another polling question, please.
Our fourth polling question today Federal and state income tax returns are A, required supporting documents, B, recommended supporting documents, C, irrelevant to the ICP, or D, none of the above. Going to give it a few more seconds. Okay, I'm going to go ahead and close out that polling question.
All right, and federal and state income taxes are recommended. Again, though they will be required during an audit, but we have them in the recommended supporting documents. And I've got them there again as you're gathering information. It's a whole lot easier, even if it's just a recommended document, and maybe you're not even expecting an audit. Or the other problem is that oftentimes audits come months, sometimes years later. It's much easier to gather, keep all of this information together, so that at the time that the audit does come, then you've got all the information already in one place ready to go. Okay, let's talk about some strategies now for completing the incurred cost proposal. Start early. I mentioned that I think in the opening, some of the opening slides of the presentation. Start early. Yes, it's December 1st today. If you're a calendar year taxpayer, right, we got another month in the year. Your incurred cost proposal is June 30th, and you're saying, Robert, I got 7 months. Why in the world would I worry about it? Again, what I told you, it's easier to reconcile stuff now. It's easier to find those things. Hopefully you see by what we've gone through with the required and recommended documents, you can see that as you close out the year, you're going to need the trial balance. You're going to need the general ledger. You're going to need copies of financial statements. You're going to need tax returns. Even if, again, as an example, even if the tax return is not a required document for submitting the ICP, if you're lucky and you get it to your accountant, and you guys are some of the ones that get it done by March, right, and you get it back and you file, right, go ahead, take a copy of that, put it in your ICP file. Then it's there, it's ready to go. You don't have to dig for it later and try to figure out what happened. Monthly reconciliation of job cost ledger. I really can't stress this one enough. Just do it and have that monthly reconciliation available for your incurred costs, right? Especially if you've done any journal entries, if you found that there was something wrong, you're going to want to be able to show what you did to fix that. Monthly or quarterly reconciliation of labor. Remember, I said that Schedule L is one that gets out of whack, and there are different reasons for that. For both the job cost ledger and the labor stuff. Usually one of the biggest issues comes with journal entries, people doing manual journal entries to fix stuff instead of actually going back to the source document. So for example, with labor, sometimes accounting or payroll will do journal entries to fix something instead of going back and forcing the employee to enter a corrected timesheet, right? So then what happens is we start running reports and doing stuff, and now things are out of whack. The quarterly reconciliation of labor really aligns with, doing the 941, even if you outsource payroll. So even if somebody else, right, is doing that for you and you just get the reports and you put them in a file at the end of the quarter, then when you get that report back from your payroll provider, pull your internal information and do that quarterly reconciliation, right? Because then in theory, if you've got 3 quarters of the year and you reconciled the 3 quarters and now you get to the 4th quarter of the year, and and part of what you're going to do for the ICP is make sure that's reconciled. It's a whole lot easier now to find any problems in that 1 quarter than it is to go back earlier on. Some of the problems with labor, I told you I'd give you pointers on this. What we see, I talked about these kinds of things in some earlier presentations. The need for homogeneous accounts is really, really important, especially for labor, and it's got to be W-2 labor. So make sure that your GL accounts, I suppose you could put W-2 labor in the title, but at the very least, if you've got temporary labor, right, where you're paying a Robert Half or a Kelly Services or somebody else, right, call it temporary labor. Make sure the only thing that gets posted there is temporary labor. If you've got subcontractors, whether they are direct or indirect, make sure that you've got accounts that are very clearly subcontract labor, right? That's somebody else's responsibility. Those are not our W-2 employees. Because we need to be able to run a report for our W-2 labor accounts and line it up to that 941 W-3 information. Again, so what I prefer to do, again, talking about the labors, I've never put W-2 in there, though certainly that would be an option. I always just make sure that I've got temporary labor for the temporary stuff. I've got subcontractor labor for subcontractor. So it's clear for somebody doing a journal entry or whatever it is that they're doing, they know where to post these items. Monthly calculation of rates, right? Stay on top. Make sure that you're running those rates. If you are in QuickBooks or some other tool and maybe you're having to calculate rates manually in Excel, do it. If you're in an accounting system that was designed for government contractors, so if you're doing something like Dynamics Nav or Uninet or Procast, Impact, there's some others out there, run those reports and track them, right? And not just run the report, but actually, okay, what was our budget? You know, what are our billing rates on these contracts? How does that line up with what our actual rates are? Stay on top of that because you might need to make changes throughout the year. Talked about the monthly reconciliation of indirect rates. Part of what you might need to do is make an adjustment to the budget. When we talked about these things, and again, in another webinar recently, we said that you either may need to make adjustments to the budget, right, so that your spending of dollars get you back in line with the percentages in the budget. You may find that on a contract by contract basis, you may see, hey, wait a minute, if we continue billing at these rates, we're going to significantly underbill or significantly overbill the government, and we want to avoid that. Then you may need to go back on a contract by contract basis and actually submit new provisional billing rates and get those approved on your contract. And with that, let me talk about, again, that Schedule I and this ultimate reconciliation. So I've talked about that, right, the incurred cost proposal as a whole is the ultimate reconciliation, right? We're trying to figure out, did I significantly underbill, did I significantly overbill the government? Why is that important? If you significantly underbilled the government, the problem is that, and you have a legitimate claim, you can go back on those contracts and say, hey, I billed you $100,000. You can see here I really should have billed you $125,000. Here's my invoice for $25,000 on this contract. Please pay me. The problem is the program probably doesn't have any money, especially if you're going back years later. And again, that's oftentimes what we see is that by the time you submit the incurred cost proposal, if it gets audited, if you negotiate it, you're certainly talking several months. And again, it's not uncommon for some contractors for that to be years later. And so if you go back to, even if you've got existing work with that agency, if you go back and say, hey, you know, I now want to claim another, doesn't matter whether it's $10, $10,000, they probably don't have the money to do it. And so you're just not going to get the money. And that's unfortunate. If the opposite is true, where you've significantly overbilled the government, well, guess what? They're going to come knocking on your door and say, hey, you overbilled us by $25,000. We'd like to have our money. And they will stand there with their hand out, figuratively speaking, right? The contracting officer is going to send you a demand letter and say, please pay us our $25,000. The problem, and what we've seen is that, and certainly $25,000 for some businesses would be painful. The problem that we've seen is that sometimes those demand letters are in the hundreds of thousands or even millions of dollars, and sometimes for some otherwise relatively small companies. Got called by an attorney, I think it's been a couple of years ago now, for one of their clients who was in some accounting, had gone through, unfortunately had gone through the incurred cost proposal, had some issues, and they were in a situation, and again, not a very big company, they were in a situation of owing the government $500,000 in overbilled costs. And, you know, the average small business, right, simply can't open their wallet and do that. And it's not that they necessarily did anything wrong and there was no fraud involved in it. And they made some unfortunate mistakes. They made some unfortunate decisions as well in some of what they did, right? But the problem with many businesses is cash in hand, cash spent. Again, not that there was fraud involved, but right, we get cash in hand, we make investments, we pay employees, we do other stuff, right? We fund other projects that are going on right now, and that was my working capital. And so, yes, even though we might agree that I overbilled you by X dollars, that doesn't necessarily mean I have X dollars sitting in the bank free and ready for me to write a check. We've talked about the quarterly monitoring of over and under billing already. Talked about starting as you close the fiscal year. With that, Jenny, another polling question, and I know we've got some Q&A. Get your questions in the Q&A. We've covered a lot, and I'm sure we have a lot of really good questions to talk through.
Yep, our next polling question is, the job cost ledger should be reconciled A, daily, B, weekly, C, monthly, or D, annually. Give everybody just a few more seconds here. I'm gonna go ahead and close this out.
And the correct answer is C, monthly, right? That's what we were going for, is that monthly reconciliation of job cost ledger. Some resources for completing the incurred cost proposal. Hire a professional. And so you might say that's self-serving, and I suppose it is a little bit, but I say with all honesty and sincerity, I tell people this, if you're in the business of government contracts, you need an accountant and an attorney both who practice government contracts. There's just so much that's unique. There's some quirks in dealing with the government. There's a whole other layer of requirements, and you need somebody who understands that. That does not mean that you fire your existing accountant or your existing attorney. For example, with your attorney, you probably have an attorney that maybe is helping you with employment law or a merger, acquisition, other things, right, in running your business that aren't necessarily related to your government contracts, and you'll probably keep them for that. And quite honestly, if you're hiring somebody to help you with the, an attorney to help you with the government contract aspect of your business, it's likely that they don't practice those other areas anyway, right? They've got enough business in the government contract space. The same is true with us as a firm. We don't do tax as an example, right? So you're going to keep your existing tax CPA, but you need someone who knows what they're doing. The other reason, the other thing that I say is you wouldn't complete your own taxes. So, and certainly most of you don't. Most people don't. You don't prepare your own taxes. You shouldn't prepare your own incurred cost proposal, right? I mean, I had to admit and break down a few years ago that even as a licensed CPA, because I don't practice tax in my own business, I got to the point that my personal and professional taxes got to be more than I could keep up with, right? There's so many forms. You're at the state level. We had local taxes. I got payroll taxes to keep up with. It's it's just a whole other world. And I had to hire somebody, even as a licensed CPA. I have a CPA who does my taxes because that's what they do. That's what they know, right? And because, again, there's all kinds of forms. There's deductions. There's things that are allowable that are not allowable. If you've been with us on this government contract accounting journey this year and you saw even at a high level what we walked through today, again, you can see there's a lot of schedules in there. There's a lot of information. You need somebody who understands how to complete that, how to validate it, and as well at times how to, again, prepare for an audit, right? So you may know as an example with taxes, and I think this is going to be a big one this year with the PPP loan stuff, right? There are accountants out there, CPAs out there, who are advising their clients on how to or not report their PPP stuff, right? That's a whole point of contention right now about what do you do, right? And they're providing that professional guidance. We do the same thing, right? We run into situations where there's an issue with the incurred costs, there's some issues with the way something was presented, and we provide guidance in preparing for navigating audits related to the incurred cost proposal. DCAA, or the Defense Contract Audit Agency, has a number of tools out there. For example, they do have the ICE model that I recommended. You see that these are links here. If you download the presentation, they should have converted as links into the PDF, and you can get to it if you go to DCAA's website. It's dcaa.mil. You can download the information. There is no requirement, and let me stress this, there is no requirement to use DCAA's ICE model. A contractor can use their own templates, and you will read this in the FAR if you go back and read the detailed allowable cost and payment clause. You just have to submit the required information. Right? It doesn't have to be in that model. You just have to submit the required information. In fact, part of what I will tell you is, even if you download that template, you're going to end up modifying it some for your business, right? Because every business is different. Everybody's structures, while it's certainly, again, there are some general guides, right? Every business has, a different number of overhead pools, as an example, different ways they calculate stuff. So you'll have to make adjustments to it. So you can build your own templates, and we do recommend that you actually build your own templates. DCAA has some incurred cost submission training out there on their website. They also have the full audit program. So again, if you get notice that there is an audit, and again, that would always be a time to call somebody who knows what they're doing to help you through that audit. But you can read the audit program information out there. There are also audit guidance memos, or MRDs. Those are memos to the regional directors. There's an audit guidance memo out there specifically on materiality in an incurred cost audit. So they have a very specific calculation that, when it comes to, are we going to have a conversation around this dollar amount, for example, variances and stuff, is it material? And they've got a very specific thing. We used this with one of our clients recently who had some issues in preparing their incurred cost proposal, and that was part of our audit guidance. So we pulled out, we calculated what materiality was. There were a couple of numbers that went over that amount, and we said, we're going to have to find a way to deal with this and explain it. And there were a couple that, that's lower than, and significantly lower than a materiality amount. We're just going to move forward, right? And if DCAA questions us, we're going to say, look, we used your own guidance. You can see the calculation here, and so that's what you would want to do. There is also an adequacy checklist that they walk you through. Again, a lot of it is just making sure that, tables and tabs cross-reference to each other, that if you've got a total and a subtotal, making sure those links to other tabs have the correct information. Another polling question for us, please, Jenny.
Our sixth polling question today: the ICE model is required when completing the ICP. A, true, B, false. I'm going to go ahead and close out that polling question in just a second. Okay.
And we had some mixed results there. So the answer is false. Remember, I just said that using DCAA's ICE model is not required. It's certainly a starting point, but it is not required. Common mistakes, and then we'll get to, I know we've got another polling question, and we'll get to your Q&A. I saw some questions coming in. Problems: numbers don't tie out or match across schedules. We find that quite often. Because again, when I was talking about the fact, right, that you'll summarize your Fringe expenses on one tab, right, but that information has to carry to another tab. Make sure there's formulas. So here is, when I talk about DCAA's ICE template, it is better. There are a couple of big reasons why I tell people not to use it. There are errors errors in their template. Plain and simple, there are errors. Not saying that they put them there intentionally, but there are errors. That the way they built the template is actually kind of complex. I think they had a good intent. It's got a little setup tab, and you think, oh, I click these boxes, you answer some questions, you click a button. It's got a macro. Well, macros in and of themselves can be problematic for people, and actually as well in that thing, if you run the macro and then you later and you enter some information and somebody even accidentally runs the macro again, you can blow up the workbook, you can lose a lot of data. It's just really messy. I'm not a fan of macros in general. I'm not a fan of the way it's built in there. Be very careful. Part of the way the macros work and part of the way the schedules are built, there are a number of hidden rows and hidden columns. Again, conceptually, I understand why they're built that way for the way that they've got some formulas. But again, that's part of the problem is there's a bunch of hidden stuff. And what we've run into in trying to correct templates that clients are using is that we have sometimes spent hours digging through and finding, for example, that a formula was in white in a cell, and it took a lot of back and forth and cross-referencing stuff until we found some of those errors. Again, with the hidden rows and the hidden columns, it just got really messy, and I don't like it. One of the other things that I think is problematic about their approach is they walk you through, and the way theirs is set up is that it recalculates claimed amounts and rates multiple times. So you'll calculate it here, you'll calculate it here, you'll calculate it here. And in theory, right, so if you had, for example, your total pool and your total base and you reference those items in theory, you could recalculate in multiple places and get the same answer. But I think you and I all know, especially when we're dealing with Excel and you know how easy it is to make a mistake in a formula and drag a formula over somewhere by mistake and maybe not catch it. Those kinds of things happen, and I'm of the approach in Excel or even on any kind of report or anything that I build is do the calculation once, reference back to the original calculation, right? Don't keep recalculating the number because there's too much of an opportunity that you mess up another formula, that you reference the wrong, you know, you start pulling in the wrong number somewhere, and then all of a sudden you've calculated, and this is what we find, is that somebody will calculate one rate on one tab, they'll calculate a different rate for the same pool on another tab, and now all of a sudden this gets, you know, and because these rates and formulas get used and referenced throughout, it's very messy. I'm a huge fan of named ranges. They use some named ranges in there, but I don't think they use them well. We have cleaned up a template. I can share a template with you. If you're interested, send us an email. It's support@leftbrainpro.com. We'll have that email address on the screen here in a few moments. But you just want to be very careful. If you know named ranges, I cannot stress enough how easy and important it is to use them. Again, you build the calculation, you build the formula in one place, you give it a named range, and then anywhere else that you need that total, you just reference back. Hey, I need, you know, I need total fringe, I need total overhead, I need fringe rate, I need overhead rate, right? So do that in one place, give it a named range, and then when you need to use that information elsewhere, pull it in. Don't recalculate it. Other areas that we find people have, they fail to complete the required schedules. When you go through, you'll note that some of the schedules are optional, and I should have said, for example, that the supplemental A1 to A4, those comparative analysis year over year, are technically optional for the original submission. However, again, if you go through an audit, they will ask you to complete them. So I say, why not go ahead and complete them? It's also just a good practice for you to complete those because some of those schedules can help you identify potential problems or identify potential questions, right, the DCAA or another cognizant agency might ask during an audit. Talked about Schedule L being the most difficult. We find that labor accounts are commingled and not homogeneous, meaning they may have other types of expenses in there, they may have other types of labor in there. The labor accounts are not labeled clearly. We find, again, manual journal entries to labor accounts don't tie to the payroll records. If you're doing, and I realize, right, there's a legitimate reason why people do monthly, quarterly, annual labor accruals, right? Payroll accruals. Make sure those are correct. Make sure that when you have the in and out, that it comes out correctly. Make sure that the reconciliation ties, right, on that monthly, quarterly basis. We find sometimes that those journal entries are part of what gets it out of whack and trying to make that reconciliation at the end of the year. For Schedule I, you're going to need to analyze your over and under billing by contract. That may be a negotiation strategy, right? Because you're going to end up presenting this information to your contracting officers, right? They're going to get these rates eventually. And, you know, if you see that you have significantly underbilled or significantly overbilled the government, guess what? Contracting officer, program people, somebody on the other side of the table is going to start asking questions. You need to be able to explain what happened, right? And what you're doing to fix it. Schedule O, and I'm sorry, this should be the supplemental O, not the Schedule O, but the supplemental O is for contract briefs. So we just run into situations where clients are not completing, those contract briefs. For T&M contracts, and this is true, can be true for cost type contracts, if you've got defined labor categories in the contract, right? So the government says, I want to buy engineer 1, engineer 2, senior engineer, whatever they've called it. And they've clearly identified an engineer 1 is X number of years of experience, certain certification, that type of stuff, certain education. If it's a defined labor category, make sure that the people charging and working those labor categories meet the requirements. That will be, during an audit, that is something that auditors will look at, because they're going to pull labor categories, they're going to pull timesheets, and they're going to say, okay, prove to me, right? And it's all statistical analysis, but they're going to hand you a handful of people and say, prove to me that these people met the labor category qualifications on this contract that they charged. And with that, we've got a final polling question, and then we'll get to your Q&A here.
Our final polling question today, given what you learned, what's your comfort level on preparing an incurred cost proposal? A, I've got it now. B, I'm a little fuzzy, but I think I can manage. C, I'm still unclear of how to prepare an ICP. Or D, I don't get it. Can you do it for me? Okay, I'm going to go ahead and close out that polling question.
And, you know, this is one, again, there's no right or wrong answer here, but it looks like we got some people who moved up from the beginning and feel at least a little bit better about it, which is good. Get our contact info on the screen, as I mentioned. If you've got questions, if you want to see a template, send me an email, support@leftbrainpro.com. You can also download this presentation and find other information on our website. You can follow us on social media. And I do want to get a quick blurb in here. We have launched monthly accounting support services. So if you or one of your clients are looking for somebody to help on a kind of a daily, weekly, monthly basis with some of those government contract accounting tasks, we can help. Again, contact us, support@leftbrainpro.com. We will be back here January 19th. Streamlining your month-end and year-end processes is what we'll be talking about. And with that, Jenny and Liz, I guess, do you guys have some Q&A questions for me?
Yes, I do have a Q&A question. Does it matter if the accounting records are on cash or accrual basis, especially if client is cash basis for tax return for the ICP?
So the ICP is going to be accrual basis. And then actually that's one of the requirements that when you go through the SF 1408, right, that pre-award accounting system survey that determines if you have an adequate or an approved accounting system, you do have to have records on an accrual basis. So the incurred cost proposal is on an accrual basis.
The next question, can you request an extension on your incurred cost proposal?
You can, certainly don't wait until June 25th. If it's due June 30th, waiting until June 25th and asking for an extension is probably not the right answer. Unless, of course, maybe you really only needed a couple of days. But you can, but you're going to have to justify why you're asking for that extension.
Okay, and the next question, you actually did cover it, but I did want to mention it anyhow. You mentioned the errors in the DCAA template. Do you have a template available? And can you talk a little bit more about that?
Yeah, so again, we have a template that we've cleaned up. Certainly it generally follows the structure that you'll see in the that you'll see in DCAA's version. I have gone in again and removed all of those hidden rows and hidden columns and other stuff. We validated formulas. We've taken it down again to the approach of do the calculation once, have a named range, refer back to that item. So that is something. And one thing that I will tell you about the template, it is a template, right? Because, for example, if you have facilities pool, you're going to have to build, another schedule in, and we can show you how to do that. We can work with you on that, but keep in mind that it is a template, and you will likely have to make some changes for your business.
Great. I think that's all the Q&A we have for today.
Wonderful. Well, thank you so much, Robert, and thank you, Jenny, for helping out with the Q&A and the poll questions. We do have about 2 minutes left here, and a question I wanted to ask you, Robert, from earlier in the presentation when you were talking through the contents of the ICP, and you went through each of the schedules, and you spent a little bit of, it felt like a little extra time on the facilities cost of money, like the facilities capital cost of money. And you mentioned that sometimes it sounded like that can be overlooked at times, and that can be costly because it's hard to get that if it's not included the first time around. Is that one of the things, like similar to preparing taxes when working with an expert, is that one of the things that you're able to really make sure all of those schedules are covered, everything's included, and it really helps to make that investment of working with an expert worthwhile, because then certain things like that might be overlooked are absolutely included in the full proposal.
Yeah, and I think that's I think that you asked that question in an excellent way, again, tying it back to the concept of taxes. So I'll tell you that, and I think we've all been there, so I don't feel bad saying this, that part of what caused me to hire another CPA to do taxes was that after getting a couple of nasty, we call them the little nastygrams, I got a couple of nastygrams from the local taxing authority. And it wasn't, again, it wasn't fraud, and it was because I had missed filing a silly form, right? And so it was like a $75 penalty or something silly, right, for failing to file some form. And it's one of those. There's not even any taxes due on the form, but you got to file the form, right? So, I went through a couple of those things, and I just it was annoying. I didn't realize that I had missed filing a form or completing a schedule. And so this is very similar, right? There's a lot of schedules here. There's a lot of information. There are things that we can uncover in completing the incurred cost proposal, right? Because we're calculating your rates, we're looking at trends, we see the trends. Because you're calculating the Schedule I and finding out where you've underbilled and overbilled the government, one of the tasks that we push back to clients, as I said, as a guidance, is go back and analyze that, right? If, for example, your cost type contracts, you're typically in the 8 to 10% range. When we do the final analysis, if you're averaging 4%, why? Right? Let's figure out what's going on, because there's probably a deeper issue there, that you're not pricing it correctly, you're not collecting the cost correctly. That we found that at times, right? We found situations where, it looks like we made a whole lot of money on this contract, but because we prepared this and we worked with the clients through some analysis, we have as well gone back and helped them to firm up some of their policies and procedures so that they're actually getting all of the costs correctly charged to the contract. They've got accurate rates. They're maximizing that cost recovery, right? They're truly billing the government for every penny that they can, right? And getting that money back. And that's some of the stuff that as a professional, right? Just like your tax person, right? Your tax person is going to help you minimize the taxes you pay and avoid having any penalties or late filing fees because you missed a form. We can do the same kind of thing.
Very good. Well, thank you so much, Robert. We're really looking forward to next year. You have an amazing lineup of topics for next year, starting on the 19th with streamlining your month-end and year-end processes. So for those of you who are with us, we want to make sure you know that you can take the course survey following the program when you close the GoToWebinar control panel. That survey will pop right up on your screen. We really enjoy your feedback. You can log into your Coursera user account to access your CPE certificate in 1 hour. The course materials are already there for you, and the recording will be uploaded later. So if you want to refer back to Robert's presentation, that will make it very easy for you to do that. Thank you for joining us. Thank you again to Robert and to Jenny at Left Brain Professionals for just an excellent, excellent program. And we're looking forward to many more topics in the new year. So take care.